Good morning, stock investors and stock traders. It is Friday, November 7th. We are about 30 minutes ahead of the market opening, and the market is headed toward a negative open with the S&P at this moment down about 0.29%, the NASDAQ down 0.43%. It follows a negative day yesterday when stocks did go down. Not too terribly, but they did go down yesterday. And we saw, some of the same stocks that had sold off previously, NVIDIA giving up some of its awesome gains, AMD, Qualcomm gave up some gains. They had a good earnings report, by the way. I really liked what they had to report. Microsoft, Meta, still in the doghouse. Meta is getting pretty attractive in its stock price. Tesla was down. And Amazon was down. There were a few pockets of green, Berkshire, and I think Berkshire is their new CEO is going to issue his very first, I think is it Greg Abel was going to issue out his first investor letter since taking over the helm over at Berkshire. So it'll be interesting to read that letter once it gets published. A couple banks did well yesterday. The pharmaceutical space did well. They made a deal with President Trump in committing to lowering the weight loss drugs. The energy space did well. And I saw that oil was rising again this morning. So they're probably going to catch a nice little bid today again. But we'll see where things go. Not a lot of things to celebrate, but let's just face it. The market's done great. Let's look at the 3-year heat map. It shows that, hey, we got nothing to complain about. Stock market has been raising our portfolios and building wealth for the last 3 years. NVIDIA up 1,228, Broadcom up 664%. Microsoft and Apple doing just fine. Google up 228, Meta up 581. So just some really, really incredible rises. Palantir, 2,107. So we have some stocks that have really done well for the last 3 years. And for the market to, kind of pause on the appreciation of stock prices, it's not bad. It could be a good thing. Kind of let some air out of this balloon, out of this bubble that has been building. So we'll see how this goes in the month of November. If we had a nice correction, I think I would treat it as good news because some stocks are a little too expensive. So that's where we're at today. So Daryl, how you doing this morning?
Doing wonderful, Victor. It's good to be here. Hello, everyone.
Yeah, and as the market sells off, anything kind of that changes in your program?
I have a pretty defensive portfolio to start with. I am down quite a bit. Last week on the 28th, we had a really interesting point in history where the S&P went up with 58% of the components of the S&P 500 actually were down on the day. That's only happened once or twice in the stock market history. So that was a day where I really felt a little bit of pain as far as my portfolio goes. You were pointing to healthcare there. I was looking at the sector charts, and believe it or not, the healthcare sector.
And if you want to share your screen, pop it into the
sure. Yeah, sure.
the stream, and I will put your screen on the board.
Okay.
You are live, sir.
Yeah, so here I have all 11 sectors plus the SPY. So 12 charts, 11 sectors. And over the last 2 months, the healthcare sector has the highest relative strength at the moment.
Okay.
I don't know. Yeah, I don't know exactly where. In fact, it's actually over the last 6 months. I'd have to dig in a little bit more to see which industries are performing the best, because I know we have some that we've been looking at, like UNH and CNC and Molina and a few others that I haven't been doing very well. But healthcare is at the top of the leaderboard as far as relative strength. Staples is at the bottom with an RSI of 30 for that particular sector at the moment. Materials isn't doing much better, just barely above 30. And communications is in the lower three charts. It's sitting at probably 30 or so, 35, maybe 40. So anyway, I thought it was interesting that healthcare was actually been performing so well
So
over
two
the
questions
last.
before you move off.
Sure, go ahead.
So first on healthcare, Eli Lilly has been doing, just based on the headlines and where I see their stock trading, it's been doing really well lately. So I would say, yeah, some healthcare stocks are really doing well.
Yeah.
Second, can you expand a little bit on what does relative strength mean? Can you give us a little more of the kind of definition there?
Yeah, they basically use the up and down days. Let me actually just pull it up. That way we can get it right from where I'm learning about it. That's not
Right from the AA horse's mouth.
yeah. Okay, relative strength. Um, so it's basically looking whether it's performing better than its peers.
hmm It's
So
peer sectors, like compared to the other sectors, it's performing better.
yes.
Okay.
I don't know how it's actually calculated right off the top of my head, but I know I've researched this before. Yeah, so I'll give you a better answer here in a couple days. I'll dig into that a little bit more.
Thank
It's
you,
one of
sir.
the Yeah, it is one of the most used indicators for relative strength
hmm
related to either a company or industry groups or sectors. So it
Now,
is broadly used.
perfect. So as you come at the market from a point of view of charts and all that kind of point of view, and I come from more of a long-term investor, qualitative point of view. But when we arrive at the same kind of conclusion, healthcare, I agree. Like qualitatively, healthcare has been left behind. And historically, like I've been investing for a long time, I did really well with healthcare. I've seen healthcare be a very important sector within the stock market. But the last 3 years, that has not been the case. Now, there's story after story that would kind of explain why healthcare stocks have done poorly. But I actually was telling an investor yesterday, or I was sharing with an investor yesterday, that I kind of feel like healthcare is one of those sectors that really is a good sector to look for value and discounted stocks, because I think it's setting up really well, because a lot of other things are really expensive. Like communication services, you were showing that earlier. Netflix has been under pressure. Meta's been under pressure. So I agree with that. So it's interesting whenever we kind of agree, I really pay attention, because I'm like, yeah, I totally agree with that conclusion. But you get to that conclusion through a different path than I do.
Yeah.
All right. So you anything else on this?
No, I just wanted to, because I was a bit surprised that the healthcare was really doing so well.
Yeah, and healthcare stocks historically have made it up, the food chain, and now I think Lilly is still the biggest market cap, and I don't know that it's in the top 20. I can't even find it. So Lilly, here it is. So Lilly is number 12. And this is a company that's producing a lot of drugs that people really depend on, pharmaceuticals. And typically, they're up there. If you looked at the most valuable companies 5 years ago, UNH would be there. And now, like, it's healthcare companies are underrepresented. Of course, tech companies like Nvidia, Apple, Microsoft are kind of leading the pack. Speaking of which, for the top 10 stocks, yesterday was a down day, but still a really good year. It looks like of the top 9 stocks, 8 of them were in the red. One was just barely in the green, but they're all doing well. But I should say most of them are doing well. A couple of them are lagging. Meta, look at that. Meta went from being one of the leaders from a year-to-date appreciation overall return perspective to being in dead last out of the top 10. So I guess hopefully Meta's getting the message. You got to clean up your act when it comes to your spend in the data center. If you're going to spend capital, owners of the business, stockholders, and the analysts are going to ask you questions. Hey, what do you got to show for it? And if it's just a pretty story, it's not going to be good enough. So it's really been tortured. And I think it's become a pretty good opportunity, by the way. A PE ratio at 27.35 for a company that's growing. I think they grew at 25%. And it's a big business. It's a big, humongous business. So that was lost in the whole CapEx excessive spending story. So that's been an interesting situation. I'm even thinking of buying some shares, by the way. I am overloaded on Meta stock. I'm good with that. I've made a very, very good return on Meta, owning it for a long time. And I use situations like this to add shares in companies that I want to be an owner in. So I may start adding shares of Meta. Looks like Amazon is on the comeback. It was kind of delayed with yesterday's sell-off, but this is another stock that I'm accumulating shares in. I already did my accumulation on Google Alphabet. It's doing the trick. Microsoft's just fine. Apple's just chugging along, underperforming the S&P, but in the positive. And then Nvidia is just killing it. We'll see how high it goes. So we had some earnings this morning. Constellation Energy, that's an interesting one. I wanted to take a look at that one. We had a couple of others. I want to look at Duke Energy. And the reason for it is I want to see if this whole, data center needs a lot of power story is making it to these companies. So I think it'd be interesting to look at it. Because what I'm trying to do there is I'm trying to either prove or disprove how real the theory that data centers are going to need massive amounts of power. Okay, I get it. Logically, I get the theory. But like most scientists, you get in that laboratory and then you prove the theory or the science. So let's prove that theory. Let's go to Constellation Energy. Let's go to Duke Energy. Are they seeing a rise in demand? Are they making a killing by selling power to these data centers? Because I think that needs to be married to some of these theories that are being put on utility companies because their stocks are really flying up. And other stocks that are out there, maybe we take a look at GMAB. They announced. We'll actually lead off with that stock. And then I put Eli Lilly in there because they've been making some noise, and I wanted to take a look at them if we could. All right. And then if you guys on the stream attendees, 28 of you, thank you for joining. If you guys have a stock that you guys would like to take a look at, we are happy to oblige. If you're a member, It's included in your membership. If you're not, just a $5 super chat. We can analyze the company of your choice. Let us know if there's a stock you want us to look at. So let's get our heads around Genmab. And we'll take a look at Genmab first to lead off. And Genmab, a biotechnology company, develops antibody-based products and product candidates for the treatment of cancer and other diseases in Denmark. The company markets Epkinly and Tepkinly for adult patients with relapse or refractory diffuse large B-cell lymphoma. So they're treating a type of cancer. They are a $17.7 billion market cap company. They sold off a bit yesterday. They're down in the pre-market. They announced yesterday. And did they announce after the market closed or before?
They're in Europe, so they reported during the day.
Okay. So that's it. So this number here probably reflects the sentiment of the earnings. The PE ratio is really low this year, moving to 20.27. It's a strong buy with a big discount. The stock this year up 38% over the 1 year, 26. The 5 year doesn't show a prosperous situation. The year to date looks pretty good, although based on the response to the stock price, the investors did not love what they heard. When we look at their earnings, the revenue growth looks good, 23% growth. They're up to $1 billion a quarter. And this is, US dollars. $1 billion. They're probably a very good margin company. Some of these biotech companies, look at this margin, 95.4. Whoa, that is making some money. Profit margin, 36%. These are fantastic numbers. Fantastic. So they make lots of money. They're growing by 23%. If we look at the quarter they just closed for September 30th, 2025. And we've got 6 analysts covering them. And the price targets are good. The best price target at 48, the lowest one at 27. The stock's at roughly $29 per share. And it's expected they're going to continue to grow. And I showed you the profitability of this business. The profitability is really, really fantastic, which is going to drive this earnings per share growth. And the PE ratio is just getting pretty ridiculous. So this stock is very interesting. If they're going to continue to grow that way, they're going to accumulate a lot of cash on their balance sheet. They have close to $3 billion with just $148 million of debt. So almost $3 billion of cash, and they're accumulating that cash quite quickly. And it's a $17.7 billion market cap company. So it's looking like a really nice situation. What are the charts showing you on GMAB?
So we looked at this one before, at least probably a month or so ago. And we had drawn these 3 trend lines. This is a 5-year daily chart. And this first trend line was basically this one here. And then when it dropped down from the 47 to the 42, we ended up drawing another trend line. And then I added just maybe yesterday or the day before another trend line to capture these peaks here. So when it was breaking out above these trend lines, we were notified of it on this stream at about $31. So I found out about this stock about right here. So on the 1st of October. So that's been about 6 weeks ago. And then it rose and created a little island here and then has fallen back down despite the really good fundamentals. And we have a 21-day exponential moving average here that has rolled over. I actually have a put in on this one to buy it at 30. It's dropped down to 28. I think I sold it for 75 cents. So my break even would be 30.25 or so, but I'll still be glad to have these shares. And in the meantime, I've been picking up smaller tranches, but I do have that one option for 100 shares. So I'm hoping this trend reverses here fairly shortly. The fundamentals look good. The earnings look good. So I can't really explain this downdraft in the prices recently. So the 200 days increasing, the 50-day is increasing, and the 5-day just rolled over. So we may be at a point where we're going to reverse this trend here. We'll look at the RSI, but before we do that, let me explain how it's calculated real quick since we asked. So the RSI just basically measures the speed and change of price movements of the stock. And you look at it over 14 days, that's the default. So if you look right here, it says RSI with a 14 in parentheses. That just means it's looking at 14 days. That's the standard setting for RSI. And you are more than welcome, if you have your own platform for charting, you can go and change that number. People rarely do, but it is available for changing. So it looks over the last 14 days. It calculates the relative strength by just looking at the average gain over that 14 days, dividing it by the average loss for that 14 days. And then you take the RS and you put it into this formula to actually get an index that oscillates between 0 and 100. So that's what the RSI is. The RSI for this particular stock, let me go down to just 1 year now that we've seen where we're getting these trend lines. You kind of lose where your starting point is if you don't go back and look and see where you started them. But the RSI is currently sitting around 41. The nice thing that I do like about this RSI is it didn't really drop too much below 40. It got down to about 37. So I like that. If a stock will reverse at that 40 level, then I like that. I don't like them going into an actual oversold condition like they are right here. So I actually think GMAB is set up to actually go ahead and reverse this decline. We do have the 5-day that's reversing, and the RSI is actually improving after holding that 37 level. The PPO was bullish until about the 28th of October. It moved into bearish territory. If we can get this reversal in price and move back for the next couple of days, then we would see this probably cross over, get a bullish crossover and move back into bullish territory. And the accumulation is also at a 52-week high right now. So I think this one's set up nicely. I'm picking up shares and I have an option to buy some if it hits that 30 strike price.
Yeah, I really like what I'm seeing. This is looking really good as a stock. And they have their earnings announcement, published on their website. I'm looking at their financial results, and it looks really good. Like they're growing their revenue really nice. I showed you the profitability, that they're at 95% gross margin, just incredibly profitable because they're really handling the science, the discovery of these drugs, and then turning it over to other companies who are going to license their patents, their discovery, and then producing drugs that are going to help people with a variety of cancers. And I have to commend this company, does a really nice job. They make it, some companies, like, for example, I own Allstate, so I'm going to criticize a stock that I've owned for a long time. The way they publish their financials, it's like they had high school interns, not to disrespect high schoolers, and they had these high school interns produce their financials. They're just not very nicely laid out. They don't give you very good information. They just give you the essentials. This company is going all out. They've done a nice job. They put interim reports. They give you their income, balance sheet, cash flow. Nice, very nicely done. Investors can come in, look at their growth on revenue. They have lots of cash on the balance sheet, almost no debt. Cash flow looks good. The cash flow is better than I expected. The other thing they do in this report is they're telling you what kind of business they are. They're in the royalty business, which is very, very productive or profitable. And they put down the value of a biotech company, pharmaceutical company, is the drugs that are under patent that are being used to treat patients. So they put that on here, and they give you a nice forecast of the pipeline of drugs they're working on, where they are. They got to go preclinical is early. Once you get to phase 3, you're getting close to a commercial stage of selling the drug and making money. So they have a pretty good pipeline of drugs. If they're going to focus on just discovering drugs, getting them out, and then other companies are going to do the manufacturing and distribution, it enables them to be faster at discovering drugs. So it's a pretty good model. I like what I'm seeing. Overall, the company stock is discounted, in my opinion. I've done my homework on valuing the cash they produce. And I think that if I weigh the value of their cash flow, net present value of that cash flow in today's value, 39% discount, using a discount rate of 10%, which is much higher, 2.5 full percentage points higher than what I would use for a high quality US company. This is a high quality company, but they're in Denmark. This is biotech. And if I look at their earnings per share and discount the future earnings that I expect out of GMAB, 49% discount. So this is a really solid discount. I mean, this is not necessarily a super small cap at $17 billion, close to $18 billion. This is a medium-sized company. They have a very strong lineup of drugs, making lots of money. I like everything that I'm seeing here. And the market's not bidding the stock up tremendously fast. As Daryl showed, you're seeing a pretty good setup. So I'm really high on Genmab. Good stock. Actually put myself.
One thing I noticed when I read through their report, which was quite lengthy, they're missing one very simple calculation. What were your earnings per share? That seems like a pretty obvious thing to put in a report.
These scientists. Yeah. They could explain biology and chemistry like nobody else.
They had everything else in there except the very simple, tell me how much you made per share.
Yeah. Perfect. So good one. Good one to lead off with. Let's move on to Constellation Energy. These guys, Constellation Energy Corporation, produces and sells energy products and services in the United States. It operates through 5 segments: Mid-Atlantic, Midwest, New York, and other power regions. The company offers electricity, natural gas, energy-related products, and sustainable solutions. It has approximately 31.676 megawatts of generating capacity. They have nuclear, they've got wind, solar, natural gas, hydroelectric assets. All right, so these guys are producing power. Over the 1 year, the stock's up 47%, 5 year up 590%. The market has opened, and this stock is trading lower. These guys announced before the market opened, so the market was not overly impressed with what they saw. It's become $109 billion market cap company. P ratio is 40. They better be growing because PE of 40 means you're growing. If you're not growing, then we got a problem. Forward P of 33. Analysts think it's discounted. So let's see if our friends over at Stock Analysis, and they did, look at that. Stock Analysis, go Stock Analysis. They updated the financials. This, my friends, is not growth. 0.3%. The story of the data center, they need so much power. And what's cool about data centers needing power is it's not residential, where, speaking of California specifically, residential customers in California are somewhat protected by the regulators. We don't see our rates, crank up year over year. It's kind of a smooth transition if there's an increase in price. We are going to have an increase in price in California because we have a lot of wildfires and stuff. And I think it was going to be a 13% increase, and it's related to the wildfires. Now, on the commercial side, commercial accounts are not protected by regulators. So if a commercial account is like, hey, I need a lot more power, these energy companies have the ability to raise their prices as they see fit. So that's why commercial accounts, big companies will do long-term agreements with these companies. Hey, I'll buy power from you for the next 10 years. I'll buy this capacity, but you got to lock me in on a price. So there's just better pricing capabilities for a Constellation Energy to a commercial account versus residential. Again, in my point of view, is California, but they're not growing. So, all right. So the stock is up 500 and some odd %. Revenues are not that exciting. Okay. This is the quarterly. So this quarter looks quite terrible, if you ask me, because it's supposed to be growing like, crazy. These guys contracted in 2019 for some reason, and 2020, maybe 2020, because we had COVID and you had factories kind of get shuttered, and you had, I'm sure, fewer stores were open, so less power, less air conditioning. People were not going into the office, less air conditioning in office spaces and so forth. And then we started to see growth. Now, this growth here is pretty exciting. I have to admit, in 2022, that's pretty exciting. But after that, not exciting. So these numbers do not align with AI is going to draw a lot of power from companies like Constellation Energy. So far, maybe next year is going to be a boom year, but so far, I am not impressed with these numbers. And you would think they could price up the sale to data centers for their power. Now, one thing I dislike about utility companies is you can never price them using free cash flow, because look at here, they just don't generate free cash flow. They have to put so much back into the power generation, plants. Their parts get worn out. They have to have qualified people working on these facilities because they are dangerous and they're very important, right? We don't want power going out and kids can't go to school. Hospitals have backup power, but you have a lot of key infrastructure, key things that society needs dependent on this power. So they have to put a lot of money back into the production of power. So they never generate free cash, which is why I've never been a utility investor. I look at this number, I'm like, I don't like this situation. I like the situation that Genmab has. They make a lot of money and they keep it. Okay, perfect. These guys make money and they have to put it back into the power plant. So that's one thing I dislike. But moving on, they are profitable because they get to capitalize a lot of that capital. But their free cash flow yield has been terrible lately. Maybe they're adding capacity. I don't know. But if they're adding capacity, they're not monetizing it very quickly. If they added capacity back here, they haven't monetized it because revenues were contracting. So fundamentally, I'm not the biggest fan of utility companies. Some people are, like these analysts. We've got an analyst with a price target of 478. Some analysts are a little more skeptical at 258. On average, they believe the stock's discounted by 9%. They are expected to grow a little bit this year, 7%, 7.48, and then 18% in 2028. Maybe they're adding capacity to their overall footprint. 18% looks good in the outer year, but these numbers, again, if the stock price was flat, I'd be like, well, this is really impressive. This is pretty good for a utility company. But since the stock price is up so much, I'm underimpressed. And earnings per share is growing. And the PE ratio is staying high up until probably 2028, because this is a interesting situation. A lot of people invest in utility companies on the story that we've been told that, hey, they're going to draw a lot more power. And this stock has been bid up 580%. I don't know that it's ever going to deliver the kind of value that I'm looking for. So I'm not in Constellation Energy as an investor. What are your thoughts on Constellation Energy?
Well, it became public, I guess, in 2022, and they have been on a steady rise pretty much ever since. They are trading below the 50-day moving average and the 21-day EMA. The 5-day is rolled over and below the 21-day at the moment. It's looking like this candle right here. It's looking like buyers were trying to push the price higher, but they were failing. There's more sellers, it looks like, at the moment, driving that price down. That's not looking very good and getting worse. We've only been open for 8 minutes, so we'll have to wait till the end of the day to take a look at that candle. But that candle does not look good. We reached a peak on the 15th of October. It sold off and then tried to make it back up there and fell about $6 short. I also see that the RSI peaked out around this peak, and then when it tried to recover, the RSI was down from the previous peak. So let me just quickly draw a line across there to show you what I'm talking about, because this is always a little bit concerning. You can see that is going down. So even though the price was trying to make a recovery and trying to go up, the momentum just never did build enough. So this was a warning signal for what we saw over the next 7 or 8 trading days. The PPO is still positive. It looks like, no, it just crossed. No, it's still positive, 0.14. But if this continues, it's going to be in negative territory. I also see the accumulation is going down, and look how much time the money flow has spent below the zero line. Had a few weeks of accumulation there and a month or so here, and looks like about 7 weeks here. But other than that, it's mostly been selling, money moving out of this particular stock. So it is showing some signs of weakness at the moment. Having this 200-day come back into play would not be surprising at this point.
Excellent. Thank you. All right. So we've got our first call out, and that's for, looks like Kurt is on the stream. Good to see you, Kurt. And Catalyst Pharma announced on November 5th. So we're 2 days after. Catalyst Pharma is a small cap pharmaceutical company. They do certain pharmaceuticals to help people with some rare diseases. And the stock has been a real good stock for the last 5 years. They've had an initial really successful drug. They acquired another business that had a successful drug launch, and then they have recently developed a couple of other drugs that are coming into the market, and it looks like they're being successful with those new drugs. They have really rational PEs, really nice low, 12.8, forward P of 15, strong buy with a 51% discount according to analysts. And when we look at Catalyst on their earnings announcement, it looks good. They grew their business by 17%, and they raised their outlook for the full year. So that was met real positively by the market. One of their drugs did better than they expected, and that's what's causing the better than expected results. Not only does this business grow at 17%, which is not bad at all, is this business is nice and profitable. So when we look at a business like this, it's not just an incredible number. Like you see some businesses grow quite nicely. Their total revenue is 578, but when we come down, 83.5 gross margin, profit margin of 37.6. These are terrific fundamentals. Just use common sense. You got a business, you sell $1,000, you get to keep $376 in your pocket after everything's said and done. Everybody's paid, all employees are paid. You paid for the product, service, whatever. And that's a lot of money to keep in your pocket. So much that the company's buying back shares. It's loading up the balance sheet with cash. And overall, things look good for Catalyst. So let's see where this one goes. But I like the long-term trajectory of the stock. It has had a pullback, and it looks like the business is looking pretty darn good. So that's two healthcare stocks that we looked at today that look pretty darn good. What are your thoughts on Catalyst Pharma?
So we're just looking at one. When did they report?
They announced 2 days ago.
Okay, so that makes sense. And it looks like after their announcement that buyers really tried to push it up, but it ended up closing.
We had a market that was selling off, right? So that might have been part of the limit on enthusiasm.
Yeah, so they traded up. It looks as much as about 8%, but ended up closing lower than the day before. And today, the candle is showing a lot of indecision. We have buyers and sellers, and the candle body is kind of in the middle of the wicks, the bottom half of it. So we have these two trend lines from the high we saw on the 10th of June connecting to this point here. It did break out above that trend line. And then this trend line is just connected to this peak. It would be nice to see it break above that trend line. And we only have 1 point touching it. If it goes up and gets pushed off that trend line, that's usually not a very good sign. But if it can break out above that trend line, that would be a good sign. The RSI is positive, currently sitting at 59. It hasn't been able to get much above that since about June. The PPO is positive. Got a lot of oscillations in this line, but it did cross above the signal line today. It is sitting above that, so that's positive. The accumulation, it's pretty much been in distribution since this high. So we're actually almost at a 52-week low on the accumulation distribution line. It's currently in bullish, money flow is currently in bullish territory, but it has spent a lot of time below in bearish territory as well. So it'd really be nice to see it break out above this upper trend line.
Interesting. I like this setup. I think good earnings report. We've seen some positive buying on really crummy days today. For example, the S&P is down 0.62% as I speak. Nasdaq's down 1.16% as I speak. So if it's pushing higher, even if it's a little bit higher, to me, it's like, hey, you got a pretty strong headwind, that you're facing, and you're still going higher. To me, that's a pretty good situation.
Yeah, we keep an eye on the RSI. So 1, 2, 3, at least 3 times it pushed up to 60 and then got pushed back down. We're currently sitting at 59. If it breaks out above that 60, that would be a good time to really start thinking about getting in, because that's definitely would push. If it keeps traveling up, it's definitely going to push this above this trend line.
Perfect. And DJ, we're going to look at GH. Sorry about misspelling your name. You can tell that I'm typing and talking and thinking all at the same time. How you doing, Fallsgrave? So, any thoughts on buying SQQQ? You ever buy the SQQQ?
I did a couple of weeks ago.
And what's your play there? I never buy it, but what's your play?
I got out of it pretty quickly at a loss, but it it wouldn't be something. It would not be something to exclude right now. If you think the market's going to continue going down, then it uses 3 times leverage on the QQQ. But you just got to watch it and don't stay in it too terribly long because they degrade over time. If you compare that to the QQQ, you're going to see price degradation over any long period of time. So they're good for short plays on up or down markets. In the case of the S, I presume they have a LQQQ as well. That would be long. If I were guessing, they have that.
So maybe Michael Burry, right? He's made some noise by shorting a couple of stocks. He shorted Palantir and he shorted Nvidia, and he knows how to short stocks. So I imagine that this particular ETF is getting a lot of energy because such a famous investor beginning to make moves with short positions is probably grabbing a lot of people's attentions. So I'm not in this. I've shorted individual stocks from time to time. Shorting the whole market, I mean, I can't argue against it. I have been saying that the market's been expensive, but rather than trying to short it and kind of work the market from that direction, I was reducing my share count and building cash. So I'd be ready for, hey, the market's selling stocks off. It's selling stocks that I like GMAB, Catalyst Pharma, and then I've got capital to work with. So it's not my game to short a lot of stocks. I think it's fun to do. I have to admit, it is fun to do. Sometimes I come out ahead, sometimes I come behind and I lose a little bit of money. But it's not the main thing that I do. Thanks for asking, Fallsgrave. It looks like Mike, the dividend investor guy, wants to weigh in. Yeah, it's definitely a good hedge. I mean, it looks like a genius move, right? Rear view mirror. Whoa, last couple of days, you're up 16%, most definitely. But boy, for the last year, you're not doing that great. If you were in this thing for a while, you're getting hammered. So this thing's probably a short-term play. Like, hey, get in, get out, and make some money quickly or lose some money quickly. So not my game, but thanks for bringing it up. It's an interesting conversation. All right, so we're going to move on. We covered Catalyst Pharma, but I wanted to show my valuation of Catalyst Pharma. Catalyst Pharma is one of the stocks that I own. I like Catalyst Pharma. I've made money on Catalyst Pharma. I want to make more money on Catalyst Pharma, and it's discounted by 52% based on my research. So I'm going to buy more shares of Catalyst Pharma. Man, you are talking me into buying shares, everybody. You are talking me into buying more Catalyst Pharma. I already own a lot of Catalyst Pharma, but looking at their earnings, looking at where this business is at, I'm in a position to want to buy more shares. I'm also thinking about buying some GMAB. I was really impressed with what they're doing, how much money they're making. So that's what I'm going to do later today when I get my hands on my portfolio and start making some moves. All right, let's talk about a request. It looks like Mike, the dividend investor guy, wants to talk a little you. All right, let me put it on the list, Mike. You're second up. We're first going to go over GH, and then we're going to go over you and handle those two stocks. Yeah. Okay. Perfect. We got another request for you, or somebody's agreeing with that review. Let's take a look at GH, which is Guardant Health. Guardant Health, a precision oncology company, provides blood and tissue tests and data sets in the US and internationally. The company provides precision oncology testing services comprising of Guardant 360, a panel of generic tests. Okay. So these tests are really important to catch things early. So it seems like a more of a, diagnostic research, healthcare. I was going to say more of a med device tech, health tech kind of play. Let's take a look at their website. I've never looked at this company, so I want to get a little more acquainted with it. Conquering cancer with data. That's what I'm talking about. Through the power of blood tests, we can uncover clues that allow doctors to discover cancer early and find the best way to treat it. Okay. All right. Okay. So I like what I'm reading. I think it's something that a lot of people would probably want. It's a good idea. It looks like the 5-year, maybe it was a little too early. Obviously, it was too early to invest in the company, but boy, whoever invested a year ago is sitting pretty with the 305% rate of appreciation. And they announced their earnings in late October. And look at that. Market said, whoa, let's crank this up. And it went from about $70 a share up to $94. It's a $12 billion market cap company with revenues of $902 million. They're not profitable yet. Not a problem. We can kind of look at the business and see where it's headed. Now, this business here, let's look at the quarterly. So look at this. When you see a business quarter after quarter increase their percentage growth, so the top line revenue growth communicates to me, is their product working? Is their product being accepted by the market, being used by more doctors? It's really a benefit to the people that are taking these services. And when you see an increase in growth rate, that means the market acceptance is really high and it's actually being recommended more often by doctors. More doctors are liking the use of these guys, their services. So that's a very positive sign, which is why I think the market really liked the stock and bought into the stock. Now, when we look at their margins, let's take a look at how profitable is this business? Are they going to make lots of money, or are they just going to do great things for mankind? Now, they are doing some type of service, so it's not quite as profitable as Genmab or Catalyst Pharma that have higher rates of profit, because they kind of can create a drug and then it gets stamped out. You sell 1 million units, your unit cost is really low. Here, they're actually providing a service. So The gross margin is not as high. So one thing to be aware of. It's still very good, but it's not as high. Therefore, they're not profitable yet. So they're not profitable yet. Their growth is exciting. I think they will be profitable once they get to scale, and they're going to be a good business to keep an eye on. The forecast, we've got 22 analysts covering them. Price targets at 110. Some price targets are way lower, and it's priced 22% too high. Now, I tend to agree that this stock seems like it's priced too high because the gross margins are not as great as other spaces within healthcare. The growth is really good. Really like the growth. But I can invest in other businesses that are already making money, and that's a lower risk for me. So this one here seems a little too priced a little too high. They're going to get into a low 20% range growth rate. They're still going to lose money up until 2028, and then they're going to have a high PE. So I'm glad these guys are successful because when they're successful, that means that people are being served by their treatment. So keep at it, keep helping people out. But this one doesn't seem like a great investment to me. It just fundamentally, it's not as attractive to me as, again, Genmab was really attractive. Catalyst obviously is already a stock I own, so I'm in it. United Therapeutics, I'm in that one, and those are small caps. This one here is a little bigger than both Catalyst, and it's about the same size as United Therapeutics. What do you think about Guardant Health?
I'm looking looking at the chart here, and it is trading above, just below a 5-day moving average, which is still increasing. Looks like it could roll over here in the next day or so. The 21-day EMA is moving up, and it's trading about 16% over that 21-day. It's trading above a upward sloping 50-day and 200-day. One thing I would caution here is it's trading 45% above its 50-day, but look how often it tests that 50-day. I mean, I can almost not count how many times in the past 2 years it has tested that. So I think we're sitting here at all-time highs. Well, no, not quite. So it has run up to 176. That was back in 21. So we're sitting pretty high, but there is risk of coming back down to this 50-day. It tested a lot. It even tests the 200-day pretty frequently. Let me go back over 2 years. I only see a 200. So yeah, it traded below a 200-day, traded for below a 200-day for quite a while. Back in into 2023 through 2024, at least through May of that year. So I'd be careful with this one. It is pretty extended. It probably still has room to run based on the highs that we saw earlier, but you also have a possibility to fall by quite a margin, 31% there, 46% if we went back down to the 200-day, which it does frequently enough to make me a bit concerned. The RSI is in overbought condition. It is interesting that this peak is higher than this peak, so it does have good momentum. That's actually a positive sign. And it looks like the PPO is at a 52-week high as well. I am starting to see these averages converge a little bit, so the histogram bars are starting to decrease here. So the difference between these two moving averages is getting smaller. The accumulation is at a 52-week high. Let's see, we're at 2 years, so that's a 2-year high. And the money flow is very positive at the moment. So it's really had a good run, but I would be cautious here just because there's definitely some risk that it could pull back to that 50 or 200 day, either one.
Thank you, sir.
I also
Yeah.
noticed a lot of selling, even though the price only came down 3%. The volume looks to be about 4 times more than the 50-day average. So there were a
Yeah.
lot of sellers on that day.
I mean, the stock's done great. So anybody that owns it, congratulations. It's just, it's from the perspective of looking forward, it just looks a little risky. So thanks for covering that, Daryl.
Thank
We're
you.
moving on to Clear Secure. They announced earnings yesterday, I believe, after the market closed. The stock is up 8%. This stock hasn't been a smooth ride. It's been up and down, but overall up year to date, looking good. For the 1 year, not looking good. And the 5 year, not getting the job done. This is a company that does security, and you may have noticed them at the airport. They have their own lines in a lot of airports, where you can actually you can bypass the general security line. I'm TSA pre-checked and I get my own line, but I noticed this line here. And they provide that service. They also do other things around security. And the one thing that I've noticed about this business that's different than, let's say, a Fortinet or a Zscaler or a CrowdStrike is they're not as profitable, which is a little bit of a unattractive characteristics of them. But let's take a look. Market cap 4.6 billion, and they're a small cap. The P ratio looks pretty reasonable for a security company. And analysts think there's a small discount out there. Now, the point that I would make, and let's take a look at the quarterly growth. Quarterly growth was 15.7. I thought it was higher. I'm going to look at their earnings in a bit. We'll confirm that number. And when we look at the trailing 12 months and look at the profitability of the business, you see that their profitability is not sky high like a Fortinet, CrowdStrike, or Zscaler. Those guys operate with like 80% margins. This is a very good margin number. 63% is good margins. It's just not great, but it is a good number with almost 21% profit. So overall, these numbers are good. I'm going to say they're not great, but they're very good. And if they're growing, I think I saw in their earnings that they were growing at. So revenue was up 15.5%. Bookings were up 14.3%. This is good growth. So they operate kind of a membership program or a subscription program. You subscribe and then you get to, cut in line, so to speak, at the airport. Now, what may hurt them a little bit is if we have this shutdown, this U.S. government shutdown, I think they're going to take 10% of flights from 40 major airports pretty much off the schedule to reduce the congestion since they have lower headcount during the shutdown. Is that going to reduce travel? I think so. I think people are going to probably, if it's a trip that isn't an absolute necessity, they're probably going to postpone it until we get out of this shutdown and the flights our flight schedules are recovered back to normal. So that might hurt them a little bit. But overall, I mean, they're operating the business really well. Nicely done, clear, secure. Looking at the forecast, we have 6 analysts covering them. We have price targets of 45 and then 25. They think there's a small discount on clear, secure. They're going to continue to grow, but that growth is beginning to really slow down to single digit. And this is an area to be aware of if you're a clear, secure investor. What's your expectation? What do you think the stock price is going to do if it does come down to a slow grower? Is the market going to be excited about it? Is the stock going to sell off, or is it just going to go sideways? Would be my expectation. or they can figure out how to grow a little better. Maybe they start partnering with big amusement parks like a Disney or something that, maybe they provide better security and make the experience at Disney even better by having better security. I don't know, just spitballing here. But this type of growth to me is concerning on the outer years. So as an investor, I'd be, well, what's my exit strategy on this? If I made some money, am I going to stay in this stock for a long time? Because if we get close to this number, is the stock going to sell off? Is the stock going to go sideways? It's not going to get overly bought because it's slow growth. So that's one thing to consider. I'd put that out there. For now, the growth is good. It's slowing down from a percentage standpoint because the number keeps getting bigger, and we'll see where it goes. Maybe they could offer this service internationally too, in, like, let's say Europe, at airports in Europe, airports in Asia, and so forth. So that is my fundamental review of Clear Secure. What are you thinking on Clear Secure, Daryl?
We looked at this one a couple of months ago, and we had this auto resistance line sitting at these two peaks, and it pulled back a little bit. It did drive slightly above this resistance line, so then it became support, and it's broken down through that. Traded sideways. Yesterday, it traded back up to that line and was rebuffed, and it's trying to make its way back up there at the moment. The RSI is sitting at 52. PPO is in bearish territory, but improving. The accumulation is slightly less than the 52-week high, which was achieved on September the 17th or so. So it's down from there a bit. Money flow is positive at the moment. So whether it breaks above this double top that we saw previously, like it did in September, we'll just have to see. The 5-day is moving up. The 50-day is rolled over and moving lower. The 200-day looks like it is still increasing slightly, but the rate of change is definitely slowing down, so that could roll over again as well. So it doesn't look incredibly strong, but it doesn't look horrible either.
Okay, perfect. I was taking a peek at the market. It is selling off. Let's take a look at the market, and then we'll get back into stocks. We've got some pretty good selling on semiconductor stocks. Google is down. Meta's down. Man, Meta's, I might have to buy some shares. It's getting too darn attractive for me to ignore. I'm going to put Meta on the board here to look at, just because it's becoming too attractive for me to ignore. Berkshire's up. I was checking their website to see if a letter had been issued out by Greg Abel, but maybe they'll issue it out over the weekend. Amazon's down again. I'll be buying some Amazon shares today. Tesla down. Eli Lilly is down. I wanted to look at Eli Lilly if we have time on this stream. I've been thinking maybe that's a good stock to consider for a big pharma, but it's been kind of a place where I've not done well in pharma in the last couple of years. Now, 20 years ago, I did great in pharma. 15 years ago, stupendous. And then, pretty much after starting in 2023, pharma's just been a disaster. It's been terrible. So when's it going to come back? I don't know. Energy, look at that. Energy's cool again, at least for a couple of days. And we've got home improvement. Home Depot is doing well. All right. People are back to buying cigarettes. Great. Enjoying their cigarettes with a Coca-Cola, hanging out at a Walmart. So the consumer staples space is doing well. because it's a risk off day. Let's get out of these expensive stocks and get into some stocks that do well when everything else is dropping. They do well in recessions and so forth. Now, one report that's come out, I'd love to get your opinion on this, is we've had job losses, right? And, the media is going to kind of spin it to get attention, but they were saying that job losses that have been reported, we haven't seen job losses like that since 2003 or 2000 something. And, I get that corporations are leaning their headcount. It's kind of a natural, or I should say it's a discipline that corporations need to have. That way their headcount doesn't swell up and their cost swells up unnecessarily. So I don't treat it as an alarming figure, but what do you think of this whole job loss report that we've heard in the business news?
I've heard a couple different conversations that I probably tend to agree with. Everyone's going to blame it on AI because that's the easy excuse at the moment. But basically, there was a lot of overhiring after the pandemic, and it was so hard to hire, and people would change jobs so frequently. It was so hard to hire that a lot of companies overhired. And I think we're starting to pay the price for that now. They have a good excuse and they're taking it.
Okay. Now, I'm not seeing that it's a doom and gloom figure. It's not like, oh my God, the economy is, going down the tubes. It's just a number. It's like, hey, those folks will go find other jobs. It's not like we're in a terrible economy. It's not like 2008 where, AIG's like gonna cease to exist. No, that was scary. Lehman Brothers stopped. They don't exist anymore. Bear Stearns doesn't exist anymore. I mean, that was like, oh man, what now? I've never seen this before. That was a moment where it was like, okay, what's going to happen? And, I think it was Hank Paulson was leading what was his position? He was with the White House. Anyway, long story short, we made it out of that. I invested, by the way. I was putting more money into the market and I started buying real estate shortly after that. So made a lot of money by doing that. But this whole job losses, it's like in California, we measure earthquakes, right? Job losses. It's like a slight tremor. I didn't even feel it. What we had in 2008 was like, wow, that was like a 6.0 earthquake. We really felt that one. Maybe 6.5. A few structures went down. So I'm not overly concerned with that. All right. So the market's selling off. Going into the Ultra Pro short would have been a good idea, but we can't invest looking at the rearview mirror. We got to look through that windshield. What's going to happen next? So we've got the S&P down 0.56, NASDAQ's down 1%. All right. I happen to think, this is probably some good medicine. This is like, man, the stock market's got to get back into that gym, do some crunches, do some, push-ups, do the cardio. Not fun. Got to take some of that fat off the market because the prices have been really high. And I'm not going to say that it's a correction at this point because it's only down 2.69% over the 5-day. If we keep going at this rate in November, maybe we're down 12, 14%. I still won't be alarmed. I'll actually be, if, little voice inside my head is like, this is good. This is good because the market's just been cranking for a while. Let's kind of take a little bit of medicine and get some of these high stock prices down a bit. So let's just keep operating here, keep researching stocks and making good decisions. All right. So I think we're going to move on
Let's take a
covered
quick
you.
look. Let's take a quick look at Meta.
Let's do it. Let's do
I
it.
have the chart pulled up.
All right. Let me hand it off to you, sir. Let's take a look at Meta.
So we had this auto resistance line set to this peak in February. It actually traded above that, tested it as support, bounced off, went up, and then broke down. So it now is resistance, which it failed to really break through to the upside and has been on this downtrend. So I've since added 2 more resistance lines just to kind of give you an idea of where the next levels of support are. This one that I'm pointing to here has support there, once there right before the tariff announcements, and then it was tested 1, 2, 3 times back in October and November. We're getting very close to that. You'll want to watch to see if it holds that support. If it breaks down through there, then the next level of support that I see, which at least has 3 points where it would be support, and that's sitting at about 533. One thing I noted here on the RSI is that the last 2 times it did run up, it failed to break through 60. So those are weak pushes to the upside. So even though it did trade above there, it was a weak momentum run. Tried to do it again and failed at the 60 line again. So that was 2 points where it was telling you that something wasn't quite right with the momentum. So anyway, this is where I'm thinking it's probably going to land somewhere in between there.
Okay. And Meta is definitely been sold off after their earnings. They came out and disappointed the market by talking about their excessive spend in the data center and then trying to brush it off with, well, even if we don't make any money on AI or don't have many revenues to show for AI, we can use it for our core business. And I didn't like that. I sat through their earnings call, and I'm glad the analyst, like I would give the analyst an A+ grade on the questions they asked. They had that management team on the ropes. This is my biggest holding. They didn't let them off the ropes. They had them in the corner, and they're question after question on that data center spend. And I have to think the management team got the point, and then the stock selling off, they got the point. But what shouldn't be forgotten, revenue growth of 26.25% on a 200 billion plus business. That's more than $50 billion of annual growth. That's incredible. Okay. Not only do these guys grow like crazy, they make money like crazy. 82% gross margins, operating margin 40%. This was a bad moment because they had this tax loss. But you look at normal quarters, they make 38.5% profit margin, and they're growing at 25%. Sign me up. Where could I buy shares of Meta? So I'm going to buy more shares of Meta. Meta, I bought shares back here, back here, back here, back here, back here, 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 and I'm going to buy shares here. I made a lot of money on Meta doing that, and it's a very good business. I want to own Meta for a long time, and they've had moments like the one they just had. They had it in 2022, and the market, I think, overreacted. It took the stock from call it 360 down to $86 a share if you measure the low point. And I'm good buying Meta. Let's take a look at the valuation that I have on Meta. And my conviction on Meta is because they are so darn good at social networks and they perfected it. They're growing globally. If you go around the world and you measure how many WhatsApp users there are, they have over 2 billion people accessing WhatsApp. That's pretty darn incredible. And it's an awesome app. I use it. Not every day, but it performs better than my text messaging. It performs better than the stuff that I pay for. And WhatsApp is theoretically free. Now they're starting to monetize it. So for a business as good as Meta, it's discounted at 31%. This is updated based on their latest earnings report. I sat through their earnings call, and I can't get a better, like, I have some stocks that I have very high conviction on that I really believe have a very solid grasp on the future. Meta is one of them. And I think it's an opportunity. So I'm going to buy some shares of Meta. So those are my comments on Meta. Thank you, sir, for leading the charge on the charts. Let's keep at it and move on. Let's move over to Duke Energy. I am curious to see how these energy companies are doing. This one is up a little bit. It announced before the market opened. Over the 5-year, this one is not bid up as much as the others. And over the 1 year, again, not bid up as much as Constellation Energy. Now, what gives? Duke Energy, through its subs, operates an energy company in the United States. It operates through 2 segments: electric utilities and infrastructure. Gas utilities, infrastructure. Okay. So it sells electricity to approximately 8.6 million customers in the Southeast, Midwest regions. Okay. All right. So these guys, they have $96.4 billion market cap, P ratio of 20, basically staying at 20. Nice dividend at 3.44 for dividend investors. It's a pretty good looking dividend. Analysts think it's discounted by 10% and their growth. So it's not updated yet from stock analysis. They have been growing historically, single digit, but growing. See how they've been growing quarter after quarter for a while. Annually, they've been growing steadily. They had a bad year in 2020. That's probably because people weren't going to the office, no air conditioning bills for corporations, and then they started to grow after that. They had a nice growth in 2022, then they kind of flattened out. So slow grower. So these guys are not seeing the tremendous, AI related data center buying of power. I wonder when it's going to start showing up, because some of these stocks, this one not so much, are really bid up. They had a small free cash flow number for last year, but all other years you see where my liking of utility companies is really low because of this line. I can't get my head around why would I buy a business where they have to put more capital into the business than they end up making in a year. It's just doesn't make any sense to me. So I go invest in other companies. And their profit margin is pretty decent. 14.7 is pretty darn good for the last full year. So Duke Energy, for dividend investors, I know they're kind of a popular one, especially if you have, this is a safety stock. If you have an economy that's down, of course, we're going to continue to buy power. And when everything else fails, this stock is rising. And we have a down day on Wall Street, so growth stocks are selling off. And some of that capital is making its way over to Duke Energy. What do you think of Duke Energy?
So they're testing their 50-day moving average at the moment. The 21-day is rotating downward. The 50-day looks like it's flattened out, but it is testing it. And it looks like it's good support at the moment. 200-day is still upward sloping. Based on this trend line, I think you could probably run back up to around 130. Maybe in the next couple of months by the end of the year. They are testing the RSI at 40. They've done that several times and maintained it. One time back here in May, they actually dropped nearly into oversold territory, but all the other times they've been able to hold that 40 line pretty good. And the RSI is increasing at the moment, giving me more confidence that we'll make a trip back up to 130. The PPO is currently in bearish territory, but just barely. The histograms are getting smaller, meaning these two moving averages are getting closer together. When the black line crosses above the red, then we're back into a bullish crossover, and we would probably be in bullish territory at that moment. RS, or the accumulation distribution, peaked out when we hit the 130 here. A little bit of selling, but not too terribly much. And we have had trading that was above the 50-day moving average most of the past week or so. Money flow isn't quite, it is positive, but it's not really bullish at this time until it gets at least above 0.05. So I think if you pick it up here, you could see a run to back to 130 by the end of the year.
Very good. Thank you, sir. All right. So the market continues to be sold off. Let's take a look at Eli Lilly. I'm curious to see what that stock looks like. Eli Lilly is a stock that I haven't invested in. It was certainly a stock that flourished for a while. And I didn't quite understand the whole weight loss and how the demand behind that, what it was going to be. These guys just really, really went up. But after really going up to 948, the stock hasn't been all that great. Year to date, 18%. You see that volatility. More recently, I mean, it's really cranked up. You could have bought the shares at 635 and taken the ride up to 914. This is a big cap stock at 819 billion market cap. It carries a high PE of 44, forward P of 30, and it's slightly discounted according to analysts. If we look at the growth rate, very good growth rate, and it's actually looks like it's been accelerating. Wow, very impressive. Yeah, this is a big number, and to accelerate that way, it looks really, really good. So, so the growth rate is very good. Let's take a look at other fundamentals. Free cash flow rate looks good, 9.2 billion, and their gross margins look terrific. Profit margins look really, really good. This is why they're worth so much as a business. Almost $1 trillion is they're making a lot of money and they're growing fast. So looks good. Eli Lilly looks pretty darn good. And some analysts believe it could go up to $1,190 per share. Others believe it could fall to 700. And they're expected to continue to grow, but the really impressive high growth numbers may be a thing of the past. In 2026, they're going to grow by 18.6. Still very good. 27, 15, and then 12 in 2028. These are still very good growth numbers, considering that they're going to be almost $100 billion business. So their earnings per share is going to expand, and their PE ratio is supposed to drop into the 20s. So interesting. I don't think there's a lot of upside left in Eli Lilly, but it certainly was an opportunity that, man, I kind of missed this one. I've been in NVO, and that was the wrong stock to be in. It was better to be in Eli Lilly, especially over the last couple months. So Eli Lilly, what are you seeing on the charts?
So we'll start off with a two-year view, just so you can see where I've attached this trend line. It's basically at the high that we saw on 22 August, and then we're connecting it to this high here. So now that we know where that's connected, I'm going to step back down to just 1 year. You can see that it tried to test that trend line, but failed, degraded for quite some time. I don't know what happened here, but that was a pretty big drop, 14%. So I have another trend line drawn between these two lows. And the interesting thing here is that the prices came down when they're traveling upwards like this. And if you're interested in buy it, I switch over from a 20-day simple moving average to a 21-day EMA. So that's this green line. When it's a gold line, it's usually just a 20-day simple moving average. But in buying mode, I use the 21-day EMA. So anyway, it did come down. And when you're on a decrease like this, if it can hold that 21-day, that's usually a really good time to buy. It comes down and tests that. So that would have been a really good purchasing time. It also did not come down and retest this trend line here. That's really good news. And then we are seeing a break above this downward trend line, which was set almost a year and 3 or 4 months ago. Connecting to this point here, it did break above that on the 3rd of November and hasn't really looked back yet. The 5-day moving average is still increasing. It is, from the shape of this, it looks like it could start rolling over, but it hasn't yet. We are seeing a little bit of a pullback today. The 21-day is still, the rate of change is still increasing. Now they are in overbought condition on the RSI at the moment. I don't see many times in the past. Let me go back 2 or 3 years. So when it does go overbought, it looks like it can stay there for 5 or 6 weeks. Here was maybe just a week or so. This looks like a week and a half. And this looks like well, those are months. So a couple of months, a month and a half, 3 weeks. And then this was about a month. So when it does go overbought, it looks like it can stay there for several weeks. It is already starting to roll over, and it has dropped out of the overbought condition. It's currently sitting at 69. So anything above 70 is considered overbought. The PPO is positive. We did have a bullish crossover on the 31st of October. We are starting to see these two moving averages converge a little bit. The money flow accumulation, when it dropped down to the bottom here on the 8th of August, the accumulation was pretty much just in distribution, but it's been increasing ever since. The money flow has been positive since the 5th of September. So it could stall out here, but it's still looking pretty strong at the moment. I would wait, if I was buying it, I would wait for another test of that 21-day EMA.
Very good. And when I value Eli Lilly, I just come up short. And I've been in this position for a couple of years. I think the stock's priced 36% too high. I think each share is worth $581, but it's priced at $911 because even their cash flows just don't add up. They're growing well. They're going to get into a growth rate in the teens. So I'm trying to forecast that cash as accurately as I can. And I just can't get to their valuation using their cash flows. I can get there to a fair price using their earnings per share, but that's my less desirable method. I use this valuation as a 2/3 weight on this number and 1/3 coming out of this number. So this is a pass for me. It's doing great. Congratulations to Eli Lilly stockholders. But this one's never been overly compelling to me to buy. And I think, like you were saying on the charts, this one may be turning over and may settle down a bit. It's certainly seen a lot of volatility over the last year and has not had long-term upward trajectory trends. So that is our analysis on Eli Lilly. So the market continues to be in the red. The NASDAQ's selling off even a little bit more. And Apple's becoming kind of a safe stock. I've been noticing that when a lot of things are falling apart for these big caps, Apple tends to go the other way. Fortinet's having a good day. It sold off after earnings.
Given the concern about the level of AI spending, it kind of makes sense for Apple because they've probably spent less than anyone in the AI players. So with this theme in the market for the last week or so, it kind of makes sense that every time all the other ones are down, that Apple is up a bit.
Mm-hmm. Yeah. I mean, there's a lot of green on the screen. It's just not big caps. So it's not taking the whole index higher. You've got the insurance space doing well. Insurance brokers doing well. You got home improvement, restaurants doing well. Even lodging's doing well. Interesting. Energy's doing well. Utilities, real estate. I think real estate's a pretty good sector to look at because lower interest rates is going to help this sector. Consumer staples is higher. Telecom is higher. And entertainment is higher. So it's a day when these big caps are letting some air out of their balloons. And I think it's a good thing. All right. So we've got a stock that I wanted to do a quick flyby on, and that's Zeta. Zeta had earnings and the stock really rose. But the market, man, it doesn't know what to do with this stock. Look at this volatility. Jeez. They announced their earnings, it popped, and then it's given up at least half of that pop. So this stock here, the fundamentals look good, really good growth, profit, everything's there. There's small cap. I also own AppLovin, and I own Zeta. I own a small position of Zeta, and these guys have strong fundamentals, but AppLovin has momentum. AppLovin is huge compared to these guys, and they're growing really well. These guys are smaller, but they are also growing quite well, growing 25.6. These numbers look really good, and they are nice and profitable. So this stock is these small caps, right? And the profit isn't as great as AppLovin. AppLovin has better profitability, by the way. And these guys aren't getting their profit down to the bottom line because they're small. They do produce free cash flow. These small caps, comparing Zeta versus AppLovin, same business, but very different market caps. And the small caps, when they go down fast at far greater increments. And that's the game, is small caps will get sold off harshly because they're lesser known. There's fewer buyers of them. And it's really playing out for Zeta. On a down day, it's selling off really, really, really fast. I'm going to think about buying shares, but I'm also going to think about maybe pausing because I don't like being overly surprised. I thought their earnings were terrific, and I don't want to buy a stock where I'm kind of hoping a little too much, and I'm probably looking at the numbers thinking that the company's worth a lot more, but the market's buying another stock in the same sector. I should go buy the stock that is doing great and everybody's buying, which in this case is AppLovin. I wonder what AppLovin's doing. I should probably get out of Zeta. I guess AppLovin's down as well, so I don't know. I'm going to think about that one. This one's just been on fire, and it's a good stock to own. So I'm going to put some thought in this area of my portfolio. I own both of these. We'll see what I do. So that is Zeta. All right, good stream today. We covered 9 stocks. We got 50 people on the stream. Thanks everybody for joining.
You want to
Mike,
take a look at the Zeta chart?
yeah.
So I've added a couple trend lines. One is a downward trend connecting this peak back in November of 2024 to this peak in 23rd of September. And I've connected an upward trending line from the 21st April low. Looks like it's been tested twice. So let's step down to 1 year. It is kind of interesting that we're getting into a wedge or a pinch point here. Market's going to have to decide whether it breaks above this downtrend line or whether it breaks below and continues lower. So I have these 2 peaks that actually did break below that trend line on the 4th of November, so a few days ago. The 5-day is moving up. The 200-day is declining, but looks like it's getting ready to roll over. The 50-day has rolled over to the downside as well as the 20-day, but I can see the rate of change is getting much smaller there. So it'll be interesting to watch and see which way this breaks. The RSI is actually moved below the 50 line into bearish territory. The PPO is in bearish territory, but we did have a bullish crossover probably on the 5th. So the day after it broke below that trend line. And it looks like the accumulation's starting to pick back up, but the money flow is still negative, but getting slightly better at the moment. So it'll be really interesting to see which way this breaks.
Thanks, Daryl. All right, so I checked the chat. I think we're caught up on the chat, and we can start to land the plane. So what's happening with your channel these days?
I've been too busy with earnings really to do any videos here recently, but I've just been putting out what the earnings are, and just those are really short 11-second videos or so. So I haven't done much other than that.
I have not been able to keep up with earnings. We have like
it's
500 companies
busy.
a day announcing. Yep. It's just the volume's too high. So I've actually been using member requests to kind of turn my attention in that direction. Over time I'll catch up. But I totally understand that earnings this time of the year is pretty busy. I am coming out with a video for members. I did a video. I finished it. I'll release it later this morning. It's a video comparing companies in the aerospace and defense space, looking at the best and worst stocks in that space. And when I create those videos, keep in mind, because I get a lot of requests like, hey, well, why didn't you include this company or that company? On some of those videos, they've been popular based on views and comments, but some of them are like close to 50 minutes long, and I think that's a little too long. If I include every stock that could be considered, man, it'll be like a 2-hour video, and that'll be too long. So on this occasion, I went 20 minutes and picked out the most valuable ones, and also picked out a couple of really popular ones like Rocket Lab, and put those in the video. I hope everybody enjoys it. I'll release it to members later this morning. If you're a member, you'll be able to view it. If you're not a member, it'll be released in about 30 days, probably 30 days in a week. I'll probably release it to the public. So that's what's going on with my channel. Heading into the weekend, I'm going to enjoy some football, and I'm probably going to stream over the weekend. I don't know when, and probably create another best and worst stock. I'm looking at some other industries, trying to see where there's value out there. I was thinking of doing one on real estate because I think there's value there, and that might be a video I do, or maybe another space that maybe we haven't looked at in a while. So that is it. Everybody, thanks so much for tuning in. We had a really nice audience today. A lot of good questions, a lot of good stocks were brought up and analyzed. Hopefully, you guys found the analysis interesting. Everybody have a nice Friday and a nice weekend. We'll be back at it on Monday. Daryl and I will stream at 9 a.m. Eastern on Monday. We plan to stream unless something comes up on Monday, Wednesday, Friday of next week in the morning, just like we did today. And hopefully you can join us on those occasions. We thank you for it. Everybody have a terrific day. Thank you, Daryl. Nice job today.
Thank you, Victor. You too. Good seeing
All right, everyone.
everybody. Take care.
We'll see you guys.